Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, May 8, 2015. Sunday is Mother's Day, don't forget. All right, so here we go. Inside the numbers tonight, we're going to talk about the SPY and the E-mini contract. We're going to talk about whether we're setting up for another blow-off top or not, or setting up for a blow-off top or not. Crude oil we'll discuss, gold, interest rates in the bond market, the U.S. dollar, and we're going to throw in natural gas tonight by request. Okay, so let's get over to the SPY. So we had a heck of an update today. What a move. So we had the phony jobs number in the morning at 8:30 comes out, and the market takes off. And it was basically a gap and go, except without the go. It was basically a gap and more or less a flat line for the rest of the day. All right, so just to give you in perspective, let's look at the 10-minute chart, and it was a gap and flat line all day. So let's go back to the daily chart because this is good stuff. All right, so I've been telling you all along the market is bullish, okay, where higher prices are coming. I know a lot of people don't believe it. That's fine. I get it. We've read this book before. We've been here before. Higher prices are coming. So I've said it till I'm blue in the face. I'm going to keep saying it until they're not coming. So last night I said one of the scenarios today was for the market to go up about a dozen points, maybe 15 handles on the S&P, and then maybe reverse on Monday for a couple of days, and then take it from there, go higher after that. Okay, so that didn't happen. We actually went a lot higher. And what that does is it brings in another scenario into the mix. Okay, we went high enough today to actually begin another rally phase in the market higher. Now let's just zoom out for a second, and we'll come back to this, but let's zoom out for a second and look at the long-term picture. Now forget about these lines, just ignore the lines and look at the chart. Okay, anybody see anything wrong with this chart? Does anybody see any reason why this chart is breaking down? Absolutely not. So what that tells you is don't try and pick a top. You're not going to be right 99% of the time, okay? Don't try it. It doesn't work. Okay, once in a blue moon, somebody picks a top and then they come on and tell you they can pick tops for the next 10 years, but they're wrong the next 52 times. Okay, don't try and pick a top. When this market's ready to come down, it'll come down. Okay, and I'll let you know before it happens that it's going to happen. Let's go back to the daily chart. And I just want to I drew a line in the IWM, and we're going to talk about the IWM right now. Haven't talked about it all week long, but I just want to show you something. Okay, here's a monthly chart of the IWM. Okay, I've connected a pivot low, and a pivot low. That's the market connecting those lows, not me. Okay, anything wrong with this chart? No. We had an up move. We went sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months. We went sideways basically for a year, and then we started to break higher. Okay. So you think that's it, or you think we're going to keep going higher? We'll see. We'll see. We could come down to test this line and still go higher. But there's no reason this market is going to break down. That's the point I'm trying to make. Let's flip over real quick to the intraday chart of the IWM. Why? I just want to make mention of one of those market tells, and you know how I like to use this one when I see something of value. The IWM was weaker than the S&P today. That's a tell, okay? The IWM was up, let's see, it was up 0.6% today, and the SPY was up 1.25%. That's not healthy. It's not a bad thing. It's just not as healthy as I'd like to see it. That's all. Just want to make mention of it. You know what the IWM is. It's small cap index, and the IWM and the NASDAQ tend to attract risky money. So risky assets go to those two indexes when the market is an all-out bullish nature. So I just thought I'd make mention of it, that the IWM was just weaker than the broader index today. Back to the S&P, and I know we're flipping around here, but I think everybody's getting the point. Okay, so we went higher, and so earlier this week we had a failed head and shoulders pattern. That's off the table, gone, right? Forget that. That's history. All right? Now, we went above this downsloping trend line. You think that line's important? I think so. We came down to test it one more time yesterday. We popped above it, tested it. boom, off to the races. What happens next week? That's what everybody's interested in, okay? What happens next week is we have two scenarios. A, it's options expiration week. So it definitely bodes well to expect the unexpected, all right? Two scenarios. One is we can come right back down, test half of this up move, retrace half of it, and then flutter around for a couple days and then see what happens from there, higher or lower towards the end of the week. Most likely not much activity towards the end of next week, but we could go higher or lower. But the market is setting up for higher. Okay, it's not a lock, it's not a guarantee, it's just setting up for higher, okay? But it's options expiration week, so you have to be aware. So here's the scenario. We're going to see one of two things next week. Okay, between Monday and Tuesday, maybe even into Wednesday, we're going to see one of two things. We're either going to see 21.25 in the ES contract. Okay, let's flip over to the ES, just put in perspective where that is. Okay, it's high enough where I can't even get there. Okay, so let's go over to the weekly chart. Okay, you can't get there. It's new highs. That's basically what I'm saying. You're not going to be able to see it on the chart. We're going to make all-time new highs, okay, take out these highs, all-time new highs at 21.25 or higher, okay, or we're going to come down back into 2070, okay? Both those things are possible. One of those two things is most likely going to happen between Monday and Wednesday of next week. Either 2070 or 21.25 or higher. Okay, so go figure that one out. That's a good one, right? So, got to see which way the market starts next week, but that's the scenario: 21.25 or 20.70. Options expiration week. Nobody should be surprised. A lot of whipsaw going on next week, guaranteed. Gold. So gold was a little higher today, but we saw when the phony jobs number came out, look what happened to gold. I mean, this is ridiculous. Up, down, up, down. I mean, the market didn't know what to do. However, what I will say is that the fact that the gold market held 1280, okay? The gold market held 1180, pardon me, 1180. To me, and held it all day. That's a bullish signal, all right? And then we finished above the important 1184 that I had told you about for the last few days. So you see where these numbers begin to repeat. And when they begin to repeat, they're more important, okay? So the fact that we held those numbers tells me that the probabilities are for higher prices into next week in gold. Not much more going on. I mean, if you look at the daily chart, really nothing going on. It doesn't even look good. It actually looks bearish, but what I'll tell you is based on the numbers, kind of a paint by numbers thing, as long as we hold above 1184 on an hourly closing basis and then daily closing basis, what you can look for is the move up to spike above 1200, maybe 1203, 1204, and if we can hold that, then you're back to 1212 and higher. Okay, so that's the scenario. 1184 is still your line in the sand. Hourly closes below 1184, and then daily, forget it. Higher prices are off the table for that period of time. As far as that goes, I think that covers gold. You should have a good picture of what's coming. Let's take a look at the oil chart. Now, oil's interesting because a lot of folks are calling for a top, and they're saying that oil's going to sell off, lower prices, yada, yada, yada. So I put another line in the chart, 58.63, okay? That's your new line in the sand. I said yesterday the market was bullish as long as we stayed above 58. I think that's the case. We did stay above 58. That promotes higher prices. I'm going to raise that support level to 58.63. Where did we finish today? 59.47. Long above that. Way above that number. So I still think 64 is possible. It's possible. It's in the cards. We'll have to see if the market begins higher. First, we have to recapture 60.50. We have to recapture $60.50 a barrel on the upside in order to even sniff 64. So right now, that's what we're watching for. Can we capture $60.50 again? If we don't, and we close below 58.63, then your next area of support is this and this channel line here, this pivot high here, which is basically at 57 and change. We'll call it 57.15 to 57.20. Well, what's the number? Let's find out what that pivot high was. 57.20. It's 57.19. We'll call it 57.20. So there's your numbers in oil. That should give you a pretty good roadmap on how oil's going to trade on the up or the downside. As long as you know your resistance and support levels and you're in a trade, you know where you're wrong, you know where you're right, you know where to move up the stop, you know where to trail the stop, you know what your next target is, right? If we get above $60.50, the next target is 64. Simple. It's that simple. Okay, let's go over to the dollar. The dollar is still not acting great. Same thing applies from last night. As long as we stay above this low here, okay, higher prices. However, I'm cautious that we're going to close below this level, and if we do, then first stop would be 93 and a quarter, and then we may trade all the way down to $90, a little higher than $90. So we'll have to see what happens. I'm just a little bit cautious, a little bit gun shy in the dollar right now. I don't love the price action. However, this may be, okay, this right here on this low may be a weekly bottom. And if so, there's several weeks of a lot higher prices to be had. So I'm not saying we're not going to see that. I'm just saying I got to see them show us higher prices, okay? Let's hit the natural gas market. So by request, no, that's copper. By request, the natural gas, one of the subscribers asked to cover natural gas. So here's what happened, okay? So we were up here, and I told you, actually I think it was here, I told you that natural gas, we traded, let's back up. We hit a low. We traded natural gas up from this low here. Okay, we traded it all the way up. Then we reversed the trade on this high, thinking that the market was going to pull back, and we continued higher. Okay, we continued higher for a couple days, and then we did reverse, what was this, Wednesday? On the 5th. We reversed lower for a couple of days, but the market never took out this low here. Okay, this low at 273.8. Okay, where did this close? 271.1. So the low, bear with me. The low 273.8. Well, we did close below it. Yeah, that should have promoted weakness, and it didn't happen. So under normal conditions, that should have promoted more negative behavior. But the market stayed above the 50-period moving average and reversed higher today. And that's bullish behavior. That tells you that the market wants to go higher. You know, under normal conditions, this should have went lower, at least to the 20-period moving average. So, you know, the market doesn't always do what you think it should do, right? It does what it does, and we have to read it accordingly. So as soon as we got above this high here, okay, 282, as soon as we got above this high and started closing above that high, you knew right away higher prices were at hand. So what's the next level of resistance is going to be all the way up here at 297, almost $3 on natural gas. So right now, I wouldn't necessarily be short because it's a bullish market, right? This is bullish behavior, all right? This is bullish behavior, right? You don't want to be short into strength like this, okay, unless you have a signal that it's a topping signal. So that's what we're looking for next. We're going to look for a daily topping signal or hourly topping signal in natural gas in order to tell us what the next move should be. But this is definitely bullish behavior. Now, one might say, if the dollar is going to rally next week, are some of the commodities going to sell off? Now, under certain conditions that would apply, but I contend that each market trades independently of others. They do correlate from time to time, and then the media picks up on them, and then everybody thinks the markets are all correlated, but it's not really the case. Each market is its own market. But right now, this is bullish, And you want to respect bullish behavior, looking for higher prices that could achieve this pivot high here, which could be some considerable resistance. But right now, there's nothing telling us that the market's reversing. You have to wait for the market to tell you what to do. All right, folks, I think I'm going to leave it there tonight. I hope everybody has a great weekend. This is David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.